We've got Robert Baur. He's the Chief Global Economist and Managing Director, Principal Global Investors, joining in live on the show. Well, great to have you with us on the show, Robert. To start off with, the currency has shown us quite a bit of an uptick. There are a number of factors which we can attribute that to. But the question is, are these gains sustainable, particularly with the fact that the QE taper talks are around the corner once again?
Well, I don't know if you're talking about the Indian rupee. I doubt if the gains will stay. Once we have the taper from the U.S. Fed, which I think is probably going to happen in January. That is, we expect a couple of good payroll reports between now and then. So our thought is that Ben Bernanke would like to get the taper started probably in January, maybe a little earlier than market consensus. So at some point, we would guess the rupee will probably continue to depreciate a little bit from where it is at the moment.
In fact, sticking to India, before we move on to the rest of the world, Robert, and if you've seen how the Indian bond markets have reacted in the last few days to the RBI decisions or otherwise, the other big important thing that a lot of people are pointing towards is the inclusion in the global bond index. How do you see this development, the pros and the cons thereof?
Well, I think it would be helpful in the sense that if it's part of the global bond index, then there'd be more index or bond index investors that would be interested in investing in the broad index. So that would be positive, and it would bring a lot more money into India in the sense of investing in those assets. So that would be positive. Would also help finance the current account deficit. So in general, I think it would be quite positive for India if that happened.
The big puzzle then, Robert, with respect to the inflation numbers, continues to remain sticky for us at levels of close to 7%. Where do you see inflation headed, and do you think that we will continue to see lingering pressures given that the structural bottlenecks continue to persist?
Well, I think you hit it on the right head. The structural bottlenecks, I think, are a key problem here in India. There's a lot of production. Food prices have been going up at a fast rate. Onion and tomato prices, in particular, are spiking. And part of that is simply the supply bottlenecks in getting the production from the farm to the consumer. There's a lot of losses in between storage, just transportation. It's expensive to get that. So that's part of what's behind inflation.
Robert, I just want to take a step back and just one word on the answer that you gave with regards to the inclusion in the bond index. Now, one of the impediments to that inclusion is easing of the foreign investment limit. Now, how do you view this and just, can that happen for the inclusion in the bond index to happen in the first place?
Well, a lot of that is a political decision being made by politics here to open up to see if some of the foreign exchange market or the investment markets can be opened up. That's really a political decision, and that's not something I really get involved with. But I think it would be positive to open up some of those investment limits. I think there's a fair amount of investment around the world that would be glad to come into India. You have a lot of positives here. You have very strong demographics. You have a long tradition of good rule of law. And I think those are some positives, and people would like to invest in India. So taking some of those limits off would probably be positive.
That's music to the ears, Robert. Thank you so much for saying that. Now, my co-anchor Avan just asked you about the inflation expectations in India as well. You would be looking at a lot of global economies. I just want to focus for a bit on Asia out here. How do you see India performing vis-a-vis some of the Asian peers?
Well, I think there's some structural problems just overall in the entire Asian world and frankly in the emerging market world. You know, the drivers of the global economy over the last 15 or 20 years has been globalization and the industrialization in China. And there's really been a tremendous boom, at least since the Asian currency crisis, in emerging markets as China industrialized. But that boom has been going on a long time, and that boom, I think, has matured. And some of the problems that arise, you get imbalances at the end of the boom. You see inflation in a lot of emerging markets, especially here in India as example. And those inflation, you see rising wages, which makes for a squeeze on profits, and cost competitiveness is falling. So I think in general there are different drivers of the global economy than there have been, and that's going to be some structural headwinds for emerging markets, China and India too.
Speaking of China, you know, there have been so many reports coming out, and as of now it seems that some of the brokerages prefer China at this point in time. They're putting them in the center stage vis-a-vis India. What do you think would be the game changer that would bring India back into the spotlight?
Oh, I think if you could promote a kind of business-friendly environment here where businesses would like to invest invest and spend capital spending. You know, that's really what was the driver of the fast economic growth here in India in the last decade from 2003 to 2008. I think there was a lot of capital spending, and really that's what's needed. Businesses need to see that they can earn the fruits of that investment. Inflation is keeping consumers spending, so there's the savings rate has come down somewhat. I think a business-friendly environment, so businesses feel they can have the earnings of their investment, would be very helpful for India.
Robert, can't help but go back to that crucial taper question. The only reason I'm asking it is because emerging markets tend to go into a tizzy whenever that word has occurred, and how do you see the overall global liquidity flows into emerging markets, particularly Asia, in light of this big event?
You know, I think when the Fed really does start to reduce its pace of bond purchases, whether it be January or March, it is certainly true that that's going to, what it's going to be is a reduction in the additions to liquidity. Now, I think there was a huge response to that, negative response, over the summer when that first taper talk started. And part of that was a reversal of the carry trade. When Bernanke first talked about keeping interest rates low for a long time back in 2011 and 2012, that really started the carry trade. Companies would borrow cheap in the U.S. and they would invest, particularly in emerging markets where interest rates were higher. But now that has reversed, and a lot of it has come out, and I don't think we'll see the same kind of plunge in stock, bond, and currency markets when the Fed actually does start, as we saw last summer. So I think that's positive.
What's the view on the bond yields in India? Because once again, we're seeing it above that 9% mark. Do you think that this kind of a trajectory, at least if we talk about the long term, is here to stay? And what factors do you think that would be contingent on?
Well, I think, of course, a lot of it's contingent on the inflation rate. If inflation continues very high, then the central bank's probably not going to have much alternative but to keep interest rates at a higher level than would be good for growth. So I think the key to lower interest rates is bringing the inflation rate under control.
You know, one final word. I don't know how would you look at it or react to this, but a very important event in India is the ongoing state elections, which a lot of people say could be a precursor to the national elections, and they would have a big bearing on what the equity markets do and probably even what the macros or the bond markets and the currency do. Have you looked at that aspect, and what are your views on the same?
Well, certainly the election next year is going to have a bearing on what happens in India. I think business is looking for some kind of guideline